Imagine a sunny afternoon in a quiet neighborhood where a child sets up a lemonade stand, hoping to make a little extra pocket money by selling cups of lemonade to friendly neighbors for just $1 each. It's a simple exchange, $1 for a refreshing drink, a classic example of how trade works at its most basic level. But suddenly, a new rule appears. Every cup now comes with a $1 tax, instantly doubling the price to $2. That extra charge is called a tariff, a government-imposed tax on goods crossing borders. It's meant to protect local sellers, but it also makes things more expensive for buyers. Unsurprisingly, your neighbor, who was happy to pay $1, now hesitates. The higher price drives them away, and your lemonade stand sits empty, the pitcher untouched. This simple scenario mirrors the real-life struggles of American farmers in 2025, caught in the crossfire of a trade standoff with China. Tariffs are more than just numbers on paper, they're taxes on imported goods that ripple through the economy. When tariffs are imposed, imported products become more expensive, making them less attractive to buyers both at home and abroad. Since the Trump administration, the US and China have been locked in a tit-for-tat trade war, each side responding to the other's tariffs with new ones of their own. This ongoing battle has reshaped global trade routes and disrupted long-standing partnerships. China, in particular, has targeted American agriculture, slapping tariffs as high as 100% on key farm exports like soybeans and pork. These products, once staples in Chinese markets, have suddenly become luxury items due to their inflated prices. For Chinese importers, buying from the US no longer makes financial sense. Instead, they look to South America, where countries like Brazil and Argentina offer the same crops at much lower prices, free from heavy tariffs. The result? American farmers are left with mountains of unsold crops, their silos and barns overflowing. The market they once relied on has all but vanished, leaving them in a precarious position. China's strategy is deliberate. By targeting the agricultural heartland, they aim to put pressure on Washington, hoping that economic pain in rural America will force a change in US policy. With a population of over 1 billion, China was once the single largest customer for American farmers, buying everything from soybeans to pork to corn. Losing access to this market is a devastating blow. Now those American products sit in storage, unsold and unwanted, while small towns across the Midwest feel the economic shock. Local businesses close, and communities that depend on farming struggle to survive. Trade negotiations have ground to a halt, and the once vital export market has disappeared almost overnight. Hopes for a quick resolution have faded, leaving uncertainty in their wake. Tens of thousands of farm families now face a harsh new reality: rising debts, shrinking incomes, and the looming threat of foreclosure. Generations of hard work are suddenly at risk. This isn't just a matter of international politics or economic theory, it's a direct blow to the people who feed the nation, threatening their livelihoods and the future of American agriculture. The trade standoff has escalated into a full-blown crisis for American farmers, reshaping rural life and casting a long shadow over the heartland's future. No crop shows the crisis facing American agriculture quite like soybeans. Once a symbol of prosperity and growth, soybeans now tell a story of uncertainty and hardship for thousands of US farmers. For years, China was the largest buyer of American soybeans, fueling a boom across the Midwest. Shipments left US ports by the millions of tons, and farmers enjoyed record profits. Encouraged by this demand, farmers invested in new equipment, expanded their acreage, and built bigger storage facilities, confident that the market would remain strong. But then, a trade war erupted. When China imposed 100% tariffs on US soybeans, orders stopped almost overnight, leaving shipments stranded and facilities idle. As of September 2025, China has booked 0 new US soybean orders. The phones are silent, and contracts that once brought security have vanished. Instead, China now turns to Brazil and other South American countries, buying up their harvests and leaving American farmers with a growing surplus and nowhere to sell. The impact has been devastating. Soybean prices have plunged from nearly $15 to just over $9 per bushel, erasing years of hard-earned gains. For many farmers, these prices are now below the cost of production. Profit margins have disappeared, and families are struggling to pay their bills and keep their operations afloat. Storage facilities are filling up fast. Silos and elevators are overflowing with unsold beans, and the pressure is mounting as the next harvest approaches. Some farmers now face literal mountains of unsold soybeans, exposed to the weather and at risk of spoilage, with no buyers in sight. They must make tough choices: sell at a loss, pay for expensive storage, or hope for a rebound that may never come. Each option carries its own risks and uncertainty. The once reliable soybean market has collapsed, leaving behind broken promises, idle equipment, and empty main streets in rural towns. For America's soybean farmers, the crisis is painfully real, and the future remains more uncertain than ever before. The pain isn't limited to soybeans. Pork exports to China have dropped 80% since 2021, flooding the U.S. market and crushing prices. California's almond and pistachio growers, once booming thanks to Chinese demand, now see exports down over 50%. Orchards are long-term investments, making these losses devastating. Even corn, once a bright spot, now faces falling exports and storage competition from unsold soybeans. The crisis in one crop spills into others, dragging down the entire farm sector. Surpluses grow, prices fall, and family farms are pushed to the brink. The ripple effects are reshaping American agriculture. Farmers are squeezed from both sides. Prices for crops have collapsed while costs keep rising. Soybean prices have dropped by 40%, slashing farm income. Production costs, seed, fuel, equipment, are fixed and rising, partly due to U.S. tariffs on Chinese goods. Equipment and fertilizer are more expensive, but crop prices are lower than ever. Many farmers now operate at a loss, forced to borrow or dip into savings. Smaller family farms are most vulnerable, often selling out to larger operations. Rural communities suffer as farms consolidate and local businesses lose customers. Even the nation's largest farm co-ops are cutting profit sharing. The financial pressure is relentless, changing the face of rural America. The dream of passing down the family farm is slipping away. The government has stepped in with billions in emergency aid to keep farmers afloat. Programs like the Emergency Commodity Assistance Program offer temporary relief, helping cover losses and keep farms running. But most farmers want trade, not aid. They'd rather sell their crops than rely on subsidies. Many see government checks as a bandage, not a cure, and worry about long-term dependence. Lawmakers and farm groups push for a trade resolution, not more bailouts. Farmers know aid is not sustainable. Reopening markets is the real solution. They want headlines about new trade deals, not more emergency payments. With China's market closed to many American farm products, the U.S. is scrambling to find new buyers for its vast harvests. The sudden loss of such a major trading partner has left farmers and exporters facing an uncertain future, with crops piling up and prices falling. Trade deals with the EU, Japan, South Korea, and other nations offer some hope, opening doors to new markets and opportunities. However, none of these countries can match the sheer scale and appetite of China, which once bought more than half of America's soybeans and a huge share of other crops. States like Minnesota are working hard to build relationships with countries like Indonesia and Bangladesh, hoping to spark new demand for soybeans and other products. These efforts involve trade missions, marketing campaigns, and building trust with foreign buyers. Japan's recent $8 billion pledge to buy more American farm goods is a positive step, but it's still far less than what China once purchased each year. For many farmers, the gap remains painfully wide. Even when all these new markets are combined, they simply can't absorb the massive surplus of U.S. crops. Silos and storage bins are overflowing, and the pressure on farmers continues to mount. Breaking into new markets is a slow, complicated process. Exporters face tough regulations, unfamiliar customs, and logistical hurdles that can take years to overcome. Sometimes these efforts even backfire, as seen with India. A failed push to expand into India led to new tariffs and deepened trade tensions, making it even harder for American farmers to sell their crops abroad. Building the trust, infrastructure, and relationships needed for successful trade takes years of effort and investment. It's a long-term strategy, not a quick fix. Diversification is the right move for the future, helping to protect farmers from relying too much on any one market. But for now, it offers little immediate relief to those struggling with low prices and unsold crops. For the time being, unsold grain continues to pile up in barns and silos, while farmers wait and hope for real change and new opportunities to emerge. The search for new markets is more urgent than ever, but the road ahead is long and uncertain. American farmers remain determined, but the challenges they face are daunting. This crisis isn't just a rural problem, it affects every American. When farmers struggle, rural economies and local businesses suffer. Farm bankruptcies and consolidation mean fewer family farms and less resilient food systems. Short-term food prices may drop, but long-term instability threatens food security. A handful of big corporations could control more of our food supply. The U.S. now faces a $50 billion agricultural trade deficit, a historic reversal. Once lost, global markets are hard to win back. The farm crisis is about food, community, and America's place in the world.